So this will be another kind of question that we can ask, okay? It's another pattern that we have for to test you on the sale of depreciable assets, okay? So in this question, if you notice that in your income statement, you have sales, cost of sales, you have other expenses, wages, all these wages expenses are paid by cash. And if you notice that there is other expenses here, okay, the other expenses here is 13,470. This other expenses here, okay, it includes cash expenses and non-cash expenses. So non-cash expenses includes depreciation. It includes loss on sale of asset. So we are going to find out the depreciation, current year depreciation, and to see whether there is any loss on sale of asset. If there is depreciation and loss on sale of asset, we have to exclude it from the other expenses, okay, before recording it in our operating activities. So we have a balance sheet over here that shows us the opening balance and closing balance of the office equipment. It also shows us the accumulated depreciation opening balance and the closing balance of the accumulated depreciation. And we have a few additional information here. So we have sold some office equipment, and then the cost price of the office equipment is 6,001, carrying amount is 2,007, proceeds from the sale of office equipment is 920, and lastly 34,000 of inventory was purchased during the last year. Okay, they asked us to prepare a cash flow from operating and investing activities. Okay, so first thing first, we need to put in all the opening balance and closing balance. For example, the opening balance and closing balance of office equipment. So opening balance of office equipment is 17,000, and the closing balance of office equipment is 19,000. Okay, and then you have opening balance and closing balance for accumulated depreciation as well. So open up an accumulated depreciation account. So opening balance is 8,100. Closing balance here is 5,000. Okay, and then if I mentioned in the previous, I did mention in the previous video, okay, about sale of asset, you must have 4 items in your sale of asset. Okay, so since you are selling off your office equipment, you need to record the cost of your office equipment. How much is the cost of the office equipment that you have sold, and how much is the accumulated depreciation of the office equipment that you have sold. Okay, you need to record the cash that you receive from the sale of office equipment, and lastly you need to find out whether this is a profit or loss. Okay, so the thing is, we are going to find out all this information in our additional information. Okay, so let's look at this. Number 1, office equipment was sold in April 2025, and the cost price of the office equipment sold, highlight the word cost price of the office equipment sold, is 6,100. So the cost price of the office equipment that I've sold is 6,100. Hence, my office equipment will be reduced by 6,100. Okay, I think there's something wrong here. Okay, so the office equipment that I've sold is 6,100. The cost price of the office equipment is 6,100. That means my office equipment reduced by 6,100. Okay, at the same time, under the sale of asset account, I need to record this 6,100 as well. Okay, and the next thing we have in our additional information is carrying amount of the office equipment sold is 2,007. So carrying amount is also known as the book value. So carrying amount equals to cost minus accumulated depreciation. So we already know the cost, we already know the carrying amount, we need to find out the accumulated depreciation. So if you rearrange this formula, okay, you will get accumulated depreciation equals to cost minus carrying amount. Okay, So if you look at our additional information B, your cost is 6,100. Okay. And if you look at your additional information C, your carrying amount is 2,007. Okay, carrying amount is 2,007. Hence, our accumulated depreciation here, okay, is 6,100 minus 2,007, which is 3,400. That means the accumulated depreciation of the office equipment that we have sold is 3,400. So this 3,400, we need to record it in two places. Number one, we need to record it in our accumulated depreciation account. Since we have sold this asset, okay, okay, I think there is some typo error here. Okay, this one's supposed to be office equipment because we are selling office equipment. Okay, so once we have sold off our office equipment, okay, our accumulated depreciation reduced by 3,400. Okay, because this is the accumulated depreciation for the asset that we have sold. Since we already sold the asset, we no longer holding the asset anymore. Hence, our accumulated depreciation reduced by 3,400. Okay? So, once we have all of these items here, we need to find out how much is your current year depreciation. So, how do we find it? First thing first, you add up everything on the debit side, which is 8,400. And in our credit side, we're supposed to have 8,400 as well. So the balance here, which is 300, is your current year depreciation. Okay, so this current year depreciation of 300 is included in your 13,470. But depreciation is a non-cash item. So later we need to remove the 300 from this 13,470. Okay, to find out how much is the cash expenses that we have. Okay, we only include cash expenses, okay, in our operating activities. Okay, we don't include non-cash item. Okay, so 300 for depreciation, and depreciation is not a cash item. So what you can do here is, okay, you need to find out all your cash other expenses. Okay, so your other expenses here is 13,470, which you can get it from your other expenses, 13,470. Then you need to minus off your depreciation, which is 300. Okay, once you have found out your depreciation 300, you have to minus it from your other expenses because this is a non-cash item. Okay, now we will look at our sale of asset account. Just now I already mentioned that you need to record the cost price of your office equipment that you have sold. Then you have to record your accumulated depreciation of the office equipment that you have sold. So the accumulated depreciation of the office equipment that I have sold is 3,400. So you put in your 3,400 here. Okay. Next, I need to record the amount of cash that I received, okay, from the sale of asset. So if you look at additional information D, okay, the proceeds of sale of the office equipment, that means the money that I get from the sale of office equipment is 920. Okay, so I receive 920 over here. So debit bank 920, credit sale of asset 920. Okay, so now I need to determine whether I'm making a gain or a loss. This is very easy. If your debit side is more than your credit side, okay, you are going to make a loss. If your credit side is more than your debit side, you are going to make a gain. So if we look at our question over here, okay, on our debit side we have 6,100. On our credit side we have around 4,120. So obviously our debit side is more than our credit side, which means we are making a loss. We are making a loss on sale of asset. Okay, so what do we need to do here is, okay, we write down the amount which is more, which is 6,100 in our total here. Then we find out our balance, which is 6,100 minus 3,004 minus 920. At the end of the day, you find out that your loss on sale of asset is 1,780. Okay, so you are making a loss on sale of asset of 1,780. Okay, and this loss on sale of asset, okay, is included in your other expenses. Okay, so this loss on sale of asset is actually a non-cash item. Okay, we need to find out how much we have paid for our other expenses. So we need to exclude this from our other expenses as well. Okay, so your other expenses is 13,470 minus off your depreciation, which is 300, and then minus off your loss on sale of office equipment. This loss on sale of office equipment is not a cash item as well, so you need to exclude it as well. Lastly, find out how much is your cash other expenses. Okay, how much is the amount of money you pay for your other expenses. Okay, once you find out the cash expenses, okay, once you find out your cash other expenses, okay, you need to calculate your payments to suppliers and employees, okay, which include your cash other expenses, which is 11,390, and the amount you pay for wages. If you look at your income statement, the amount that you have paid for your wages is 20,000. Okay, and lastly, you need to look at how much of money you pay for your inventory. Okay, so if you look at your additional information E, okay, 34,000 of inventory was purchased during that year. Okay, and then you pay it by cash. So altogether you have paid 34,000 for inventory. Okay, and you have paid, your total payment to suppliers and employees will be 65,390. So under your operating activities, your cash paid to suppliers and employees will be 65,390, and don't forget the negative sign because this is a cash outflow. So for the receipts from customers is very simple. You look at your sales. Okay, your sales is all made by cash, so all of these are cash sales. So your receipts from customers and employees would be 95,000. So you put in 95,000 straight away. So 95,000 minus off 65,390, your net cash from operating activities will be 29,610. Okay, so I've done half of the questions. We still have another half of it. Okay, we need to prepare the cash flow from investing activities. Okay, so this is super simple. Okay, the thing is you need to know how much of cash you receive from the sale of asset. Okay, if you look at our sale of asset account, we have received 920, okay, from the sale of assets. So you have proceeds from sale of asset 920. So under your investing activities, you have proceeds of sales of office equipment 920. Next, you need to check whether you have buy any new assets or not, whether you have buy any new office equipment or not. So we need to look at our office equipment account to see whether we have buy any new assets. Okay, so our opening balance is 17,000. We sell off 6,100 worth of office equipment. So I supposed to have a closing balance of 10,000 plus. However, my closing balance is 19,000, which means that I have bought new assets during that year. Okay, so I need to find out how much is the amount of money that I have spent on the new office equipment. So what can I do here is I need to balance off all this account. Okay, 6,100 plus 19,000 equals to 25,100. So you will have 25,100 here as well. And the balance between the differences between 25,100 and 17,000 is the amount of money I have spent on office equipment. Okay, so I spent 8,100 on new office equipment. So when I buy new office equipment, debit office equipment, credit bank account 8,100. So this 8,100 here is the amount of money I have spent on new office equipment. So under investing activities, okay, you will have purchase of office equipment. Okay, I spent 8,100 to purchase my new office equipment. Okay, so 920 minus 8,100 equals to negative 7,180. Okay, so this is how you prepare your operating activities and investing activities for this question here. I need to remind you again that every question is unique and you need to do a lot of practice, a lot of exercises to make sure that you understand and you know how to do all these kind of questions.